Hi there, and a very warm welcome. Great that you took the time to be here today. We'll wait just a little moment for the latecomers, and then we'll get going. Before we start, I always like to see who's actually watching. Drop a quick note in the chat and let me know what city you're tuning in from today. What corner of the world are you in right now? Quick note up front, we're recording this. If you're watching the recording, parts may have been auto-translated by AI. Small language quirks or unusual phrasings can pop up. Please don't let that throw you off. I personally only speak German and a bit of English, so anything else runs through automatic translation. I hope I still come across clearly. Cool. I see folks from Thailand, Sawadika, great that you're here. Japan too, awesome. I see Korea, hello. Dubai, also in the room, super. Wow, so many people again today. That really makes me happy. Thanks so much for being here. We'll do a Q&A at the end. Just drop your questions into the chat as we go. I'll collect them and go through every single one. Promise, I'll take the time for each one. Okay, let's go. Welcome to the GoldGridBot webinar. For the next few minutes, we'll talk about something that's been on my mind for a while. Automated trading on your own broker account. How the whole thing works, what it can really do, where the limits are, and very importantly, what you need to watch out for so you don't fall into one of the many traps out there. But before I show you the system, I want to tell you who I am and why I'm even standing here. My name is Dennis Hoinkes. I'm 48 years old, born and raised in Germany. Today I live and work between Cyprus, Dubai, and Thailand, 3 places that have become a kind of home for me. 20 plus years in web development and marketing, trading on the side, not full-time. I've been doing it intensively for the past few years. That exact combination, tech, marketing, and trading experience is what eventually led me to build GoldGridBot. It's basically the essence of everything that actually worked for me in the end. So what's in it for you being here? 4 things on the agenda. First, you're going to understand exactly what the GoldGridBot actually does, how the algorithm works, why it runs specifically on gold, and what sets it apart from all the other stuff out there. Second, you'll understand what's behind it technically, the strategy, the math, the logic. No black box, no marketing fluff. When you leave this webinar, you'll know why this bot works and why it sometimes loses too. Third, and this one really matters to me, we'll talk honestly about risk. What is a drawdown? Where are the limits? When does even this bot lose? I'm not going to promise you a Ferrari. I'll show you the downsides because you need to know them before you put anything on the line. And fourth, at the end, we'll go step by step through how you can today, within the next hour if you want, already be running the bot live with a demo account, no risk, no credit card. Okay, now to my personal trading story, because it matters, so you understand why I ended up at the bot. A few years ago, I started off classically with stocks, ETFs, dividend strategies. Opened an account with a broker, picked some good stocks and held them long term, plus ETFs on big indices, ran dividend strategies. Over the years, that gave me 8 to 12% return. Medium risk, peaceful sleep. It works, but it's also slow, very slow. You need patience and time. Then came copy trading. You essentially follow other traders who automatically copy their trades into your account. Sounds amazing at first. You don't have to understand anything. You just follow the pros. It actually got me 6 to 10% return. But, and this is the lesson, most of those pros aren't pros. I had a trader with dreamy stats for a whole year. Then he took one single position that was his entire strategy, went all in, and my account was down 30% in a week. The lesson, you give up control, and you don't know when the other person is going to lose their nerve. Then I thought, okay, I'll do it myself. Day trading. I sat at the chart at 7 in the morning, analyzed candle patterns, layered indicators on top of each other, watched every newscast, and I lost one trade after another. There were days I was up in the morning, 20% down by lunchtime. In the evening, I tried a big position to claw it back, and by the end of the day, another 10% was gone. In total, I lost 50,000 euros day trading. That's high risk, yes, but it's also a psychological drama. Emotions beat every strategy. When you're staring at your screen and your money is melting in real time, you stop making rational decisions. Period. The turnaround came with bot trading. I bought a simple bot, ran it on a small demo account, didn't look at it for a week. When I came back, the account was in the green. Not because I was particularly smart, but because I didn't interfere. That was the moment it clicked for me. When you take the human out of the equation, half the problem is already solved. Since then, I've been building my own bots. With the GoldGridBot, I'm now over 60% a year and I sleep peacefully. So I was where you might be right now, frustrated, torn between several strategies, going back and forth. And I can tell you with deep conviction, only one thing has worked long-term for me. Clear rules, automatically executed, no gut feeling. Let's take a look at why so many people lose at trading. And these aren't small numbers. 76%, 3 out of 4, retail traders lose money long-term according to ESMA studies. Not a little, significantly. Why? 4 main reasons. Emotions, fear, and greed. You sell too early because you're afraid of losing the gain. You hold too long because you hope the loss will come back. Both are killers. Time. Who actually sits 8 hours a day in front of a chart? Apart from full-time pros in investment banking, nobody. Discipline. You set a stop loss at -5%. The market hits it. You move the stop loss a little further and a little further until you're at -20% and you don't want to accept it anymore. Every one of us does this, me too, multiple times. And inconsistency. Today, you run strategy A, tomorrow B, the day after a YouTube video comes along and you switch to C. None of those strategies stand a chance because you don't give any of them time to work. Those exact 4 problems are what the GoldGridBot solves. Let me show you how. Imagine you had an assistant who never sleeps, never panics, never gets thrown off the plan. 24 hours a day, 5 days a week, follows the exact same rules. That's exactly what the bot is. It does 3 things. First, it automatically finds the best entry points based on mathematical market analysis. No gut feeling, no I'm feeling bullish today. Second, when the price drops after the first entry, the bot buys more at lower levels. Picture it like a safety net. Every additional position lowers your average entry price. When the market then recovers, you only need a small move up, and suddenly all positions are in profit. Third, when take profit is hit, the bot closes all open positions together. In a single moment, the entire net gain is locked in, and then a new cycle starts automatically. Here you can see the bot live in action. That's gold against the dollar on a 1-hour chart. The blue arrows are the buy entries the bot places. The red ones are the exits. You can see this isn't one trade a day. These are many small, precise moves, completely without my involvement. I'm not sitting in front of it. The bot is doing this. What's the math behind it? 3 building blocks that matter so you understand why this bot is different from the next miracle bot on Telegram. First, the grid levels. Those are multiple buy orders at fixed intervals below the current price. Every one of these orders is tracked individually. The bot never loses the overview. Second, the volatility calculation. The spacing between the levels and the size of the positions are calculated dynamically from current market volatility. When the market is calm, the spacing is tight. When it's wild, the spacing widens. Static would be a mistake, especially with gold, because gold can behave extremely differently. Third, the net take profit logic. That's the heart of it. Individual orders don't close on their own. All positions close together as soon as the net profit reaches the target, meaning individual orders are unimportant. The bot thinks in cycles. And all of this is no black box. Every rule, every parameter is documented and configurable. If you're a programmer and want to verify it, you can. Now to the uncomfortable part, drawdowns. People rarely talk about them, but they're the most important thing you have to understand. Loss phases are normal. Every good strategy has them, including the GoldGridBot. It goes through phases where it's -15 to -25% in the red. And I remember exactly last March, the bot was at -18%. My gut said, shut it off, something is broken. My head said, no, that is the strategy, hold on. 2 weeks later, I was up 4%. Had I shut it off, the loss would have been real instead of a temporary paper loss. That's the lesson. Drawdown is not a defect, that's the strategy. What matters, the bot has come back from every drawdown so far. But, and this really matters to me, an honest risk warning at this point. Trading CFDs is high risk. You can lose money, including all of your invested capital. Past performance never guarantees future returns. We are not investment advisors. I am not giving you investment advice. You make your own decisions. Only invest money whose total loss you can stomach. The software is a tool. You remain the person who is responsible. Anyone who tells you otherwise is lying. And precisely because I know these risks, I've built in 3 mechanisms to cushion drawdowns. The first is our risk cap system. Per 20-day period, each bot has a performance target. If the target is hit too early, the system throttles automatically. Concretely, I once had a risky bot that did plus 30% in 2 weeks. Instead of celebrating, I cursed because I knew that's too much. That's going to come back to bite us. That's exactly why I built the cap. The bot gets a break even when it's running particularly well. The second mechanism is an adaptive daily threshold. On days where the bot has already performed strongly, the system blocks new entries. Closed trades keep running normally, but we don't take on additional risk. And the third mechanism is 3 clear risk levels. Moderate at 2 to 3% per month, standard at 4 to 5% per month, risky at 8 to 12%. You choose what fits you and your risk tolerance. No strategy eliminates risk completely. That's not possible, otherwise it wouldn't be trading. But good risk management keeps you in the game long term, and that's what counts. So what can you realistically expect? If you go with the moderate variant, conservative, calm, you can expect 2 to 3% return per 20 trading days. That works out to roughly 24 to 36% a year. Stable, smaller drawdowns for the cautious among us. Standard is the middle ground, balanced 4 to 5% per 20 days. So in a year, around 48 to 60%. More swing than moderate, but also more return. That's the variant most of our users go with. And then there's risky, aggressive, 8 to 12% per 20 days. That's 96 to 144% per year. That's a lot. But the drawdowns are also significantly bigger. This variant really is for the experienced only. If you've never traded before, don't start here. Very important. These are numbers from historical backtest data from 2024 to 2026 with our risk cap system applied. No guarantee. The future can look different. Before you take a single step, I want to give you 3 things you should never do. This is one of the most important parts today. First, never send money to people. If someone messages you on Telegram, WhatsApp, or Instagram saying, "I'll trade for you, send me $5,000. That is always a Ponzi scheme. I had a friend who wired 10,000 euros, saw nice charts for a month, then the account was deleted and the guy was gone. With us, it's built differently. Your money stays on your own broker account. We don't see it, we can't even reach it, we only send trade signals. Second, never share account passwords, not even with us. We use OAuth 2. That's exactly the same system as login with Google or login with Apple. You give the bot a trade permission, but you never hand over the key. That's a huge security difference. Third, never unregulated brokers. We work exclusively with 2 brokers, FX Pro, a broker with 3 licenses, CySec in Cyprus, FCA in the UK, FSCA in South Africa, and Black Bull from New Zealand with an FMA license. Why does that matter? Without a license, you have 0 deposit protection. If the broker goes bust, your money is gone. With a license, you're protected. At FX Pro, for example, client funds are segregated at major European banks. And one important tip on top, always start with the demo account. 14 days free with us, no credit card. Watch the bot live, working with play money, before you put a single real dollar on the line. Before we go through the setup steps in a moment, let me give you 4 more concepts. The broker quizzes you on these in the knowledge test, and you need them anyway, so you understand what's happening. Concept 1. What actually is a CFD? CFD stands for Contract for Difference. That's an important point. When you buy a CFD on gold, you're not buying actual gold. You're buying a contract that pays you the price difference. Gold goes up, you win. It drops, you lose. Upside, you can control a large position with a small amount of capital. Downside, higher risk because it's leveraged. With EU brokers, you're protected against a negative balance, meaning at most you lose what you put in, never more. That's an EU requirement. Concept 2, stop loss versus take profit. Stop loss is your automatic emergency exit on a loss. You buy gold at $4,000, set the stop loss at $3,950. If the price hits that, the broker sells automatically. Loss capped, you're out. Take profit is the exact opposite. Automatic profit taking. Gold goes up to 4,100. The broker closes automatically and locks in the gain. You set both before the trade, not in the middle of it. That's discipline through technology. Concept 3, leverage and margin. Leverage of 1 to 20 means you control a position worth $4,000 with just $200 of your own capital. Those 200 are the margin. They're frozen as security until you close the trade. The formula is simple. Margin equals exposure divided by leverage. So 4,000 divided by 20 equals 200. Very important. Be careful with high leverage. At 1 to 500, just 0.2% of price movement against you is enough to wipe out 100% of your margin. Leverage is a double-edged sword. It multiplies gains, but the losses just as much. And concept 4, the spread. Here it gets interesting because a lot of people don't get this. On the exchange, there isn't one price. There are two, the bid price, what you can sell at, and the ask price, what you have to buy at. The difference between them is called the spread, and that's basically the broker's fee. In concrete terms, every trade automatically starts down by the spread. The market has to recover that spread first before you can be in profit. Sounds small, but it adds up over many trades. All right, now to the practical part. How do you actually get started? In 6 simple steps. It's honestly easier than booking a flight. Step 1, you register at GoldGridBot. 14 days free, no credit card. You give just your email address, pick a password, and you're in. Step 2, you choose a strategy. Moderate, standard, or risky. Pick the one that matches your risk profile and your gut feeling. You can switch anytime later, no stress. Step 3, you open a broker account with XPro or Black Bull, depending on what region you're in, done online in 5 minutes or digital. The knowledge test we just covered, you'll handle it easily now because you know the concepts. Step 4, you set up a CTrader account at your broker. That's basically the software trading happens through. We strongly recommend start with demo. Let the bot run 2 weeks with play money, watch how it behaves. When you feel comfortable, you switch to live. Step 5, you connect CTrader with our bot. Through OAuth 2, secure, no password sharing. You assign your account, set your parameters, risk level, lot size, trading hours. And step 6, you go live. The bot starts automatically. You comfortably watch in our dashboard how everything is running. You can pause or stop at any moment, just one click. Here, you're now seeing our backend live. That's a real CTrader account from one of our active testers. The trades are mirrored one-to-one to our Telegram channel. You can follow performance live anytime. Full transparency. No stock photos, no doctored screenshots. The channel is called GoldGridBot Free. You'll find it on Telegram at t.me/GoldGridBotFree. Before we get to your questions, let me run through the 5 most common questions I keep hearing. Do I need prior trading knowledge? No. You pick a strategy, the bot takes over the rest. But, and this is important, understand the risk that we just walked through. What does it cost? 14 days free, no credit card. After that, there are 2 plans. The starter plan at $20 a month, 1 strategy active. The pro plan at $50 a month. All strategies, 3 concurrent accounts allowed. How much starting capital do I need? We recommend at least $1,000, better $2,000. Why $2,000? Because that's a good drawdown buffer. If the bot is at minus 20% for a moment, you've still got 1,600 left and the bot has enough room to complete its cycle. Can I stop at any time? Yes, anytime. You start, pause, and stop, all at the click of a button. Full control stays with you. And does my money stay with me? Always. It matters to me that you understand this. We never get access to your money. You trade with your own broker account. We only send signals. That's the biggest security difference compared to all those send me money providers out there. All right, that's it from my side. If you want to dive in, 14 days free, no credit card, no auto renew. You can simply try it out. If it's not for you, you've only lost some time. But if it is for you, then you've got a bot that works for you 24 hours a day, no emotions, no discipline issues, exactly what I needed years ago. All right, I'm going to grab a quick sip of water and then we'll go through your questions. Just drop them into the chat. I'll answer all of them, honestly and directly. That's what I'm here for.